Dame Dash isn't broke. You're confusing cash with wealth, a financial literacy breakdown. People love to call Dame and Dame Dash broke, but most of the time they're not using a financial definition. They're reacting to headlines and emotions. In real life, broke is not a personality. It's not a rumor. It's math. Let's define the words the right way, because if you don't define the words, you can't understand the story. There's cash poor, which means you don't have much spendable cash right now. That is a liquidity problem. There's cost burden, which means your fixed bills are eating too much of your income. Housing experts use a standard definition. If your monthly housing cost is more than 30% of your income, that's called cost burdened. If it's more than 50%, that's severe cost burden. That's straight from HUD data definitions. HUD user. Then there's insolvent, which is the ugly one. Insolvent means your obligations and liabilities are crushing you, and creditors can legally force collections, seizures, and court actions. Now I'm going to say something that will make people uncomfortable, but it's true. If you're living in a major city paying $3,500 a month rent, that does not automatically mean you're successful. It depends on what you earn and what you keep. If $3,500 is more than 30% of your income, you are cost burdened. If it's more than 50%, you're severely cost burdened. That means you have less room to save, invest, or handle emergencies. HUD user. And this isn't rare. A Congressional Research Service brief, using census survey data, explains cost burden using that same 30% standard and discusses how common it is. Congress.gov. Now stack on a car payment. A $600, $800, or $1,000 car note is not just a car. It's a monthly obligation. And when you combine rent plus a car payment plus credit cards, you start living inside a trap. You work to pay bills, and the bills leave you no margin. That's why the debt-to-income ratio matters. The Consumer Financial Protection Bureau defines DTI as your monthly debt payments divided by your gross monthly income. Consumer Financial Protection Bureau. When people don't understand these ratios, they confuse lifestyle with wealth. They see a nice car and assume the person is up. Meanwhile, the person might be one missed paycheck away from collapse. That's not wealth. That's pressure. Now let's bring it back to Dame Dash. Here are the facts that fuel the broke talk. Major outlets reported that Dame Dash filed Chapter 7 bankruptcy in September 2025, and the filing described roughly $25.3 million in debts and only about $4,350 in personal assets, with large categories including about $19.1 million owed to the government and nearly $648,000 in domestic support obligations. So yes, on paper, that is extremely low personal liquidity and extremely high liabilities. That's not gossip. That's what's being reported from court filings. Then, in late December 2025, multiple reports said his film company Poppington LLC was sold at a bankruptcy or court auction for about $100.50 as part of efforts connected to roughly $1 million in defamation-related judgments or claims. People see bankruptcy and $100 auction, and they yell broke. But here's where financial literacy matters. A forced auction is not a normal sale. It can reflect legal pressure, limited bidder interest, and risk around the asset. A low auction price does not automatically describe a person's talent, future earning power, or what they can rebuild. It describes what the market would pay at that moment, under those conditions, with creditors involved. So what's the accurate way to say it? The accurate way is, Dame Dash appears to have serious insolvency-level pressure and heavy creditor exposure, based on the reported bankruptcy filing and enforcement activity. That's very different from the childish version, which is, he's broke, he's done, it's over. Now here's the part that people need to hear, especially anyone who's stuck in the comment section. A lot of people calling someone else broke are financially broke themselves, but they don't know it because they think broke means no designer clothes. No. Broke means you have no margin. Broke means your lifestyle is a liability. Broke means you have bills that own you. And this is where business structure comes in, because people throw around words like LLC, S-Corp, and trust like they're magic. An LLC is a business structure created under state law. The IRS literally describes it that way. and explains members and how it's treated for tax purposes. IRS. An S corporation is not a thing you buy. It's an election you file for. The IRS explains that becoming an S corporation requires submitting Form 2553, and the election causes items of income and deduction to flow through to shareholders. IRS. And a trust is not automatically asset protection. A revocable living trust, which is the one most people talk about, generally does not protect your assets from creditors while you're alive, because you still control the assets. That's explained clearly in mainstream legal/financial sources. So the truth is simple. Structures are tools. Tools can help you build wealth, protect operations, and plan your estate. But structure alone doesn't mean you're rich. You still need profit, clean paperwork, and real financial discipline. The real reason people keep getting fooled is that they don't read beyond the headline. They don't look up definitions. They don't look up filings. Furthermore, they don't learn the vocabulary of money. They just repeat whatever gets clicks. If you want to stop being manipulated by headlines, you have to change what you consume. Read. Verify. Learn basic ratios. Learn basic structures. Learn the difference between cash, assets, liabilities, and enforcement. And when you do that, you'll stop using broke like an insult, and you'll start using accurate words that actually help you make better decisions. Key takeaways you should remember. A person can be cash poor today and still rebuild tomorrow. High rent and high car payments can make you cost-burdened even if you look good. HUD defines cost burden at 30% and severe cost burden at 50%. Debt-to-income ratio is a real measurement, not a vibe. CFPB defines DTI clearly. Dame-Dash's broke headlines are driven by reported bankruptcy numbers and enforcement actions, not just internet talk. LLCs and S-Corp are tools, and an S-Corp is an election filed with the IRS. A revocable living trust is usually not creditor protection while you're alive. Where to verify the facts you heard in this video? Look up the reporting on Dash's Chapter 7 filing and the debt/asset figures, Los Angeles Times. Look up the reporting on the Poppington LLC auction sale price and the reason it went to auction, Digital Music News. Look up HUD's cost burden definitions, HUD user. Look up CFPB's definition of debt-to-income ratio, Consumer Financial Protection Bureau. Look up IRS pages on LLCs and S-Corp election rules IRS. Books to recommend on camera for people who want real financial literacy. The Psychology of Money, Morgan Housel. I Will Teach You to Be Rich, Ramit Sethi. Your Money or Your Life, Vicky Robin, Joe Dominguez. The Millionaire Next Door, Stanley Danko. The Simple Path to Wealth, J.L. Collins. Profit First, Mike Michalowicz, for business cash flow discipline. The E-Myth Revisited, Michael Gerber, for building a real company, not a hustle. Nalo's Guides on LLCs and Basic Small Business Legal Setup, Practical, Plain Language.